Good morning and welcome to Charting the Markets on Monday, the 11th of September. Last week, equity markets fell, and this week we had a mixed opening in Asia and also a mixed close, whereby, for example, the CSI 300, the Shenzhen and Shanghai top 300 stock index rose up. And that was on hopes that deflationary pressures were beginning to ease. And we had China's CPI come in at plus 0.1% in August. But at the same time, we also had Country Garden, the country's large property developer, which faces a new round of voting by creditors to extend repayments of 8 onshore bonds by 3 years, having avoided default at the last minute twice already this month. And the voting is due to conclude at 10 p.m. This evening in Hong Kong. That's 3 p.m. UK time. In Japan, however, equity indices declined. The Nikkei 225 was down about 0.5%, and that was after the Bank of Japan's governor, Kazuo Ueda, signaled that the negative rates policy in Japan could come to an end in early 2024 if wage increases were to continue. Now, let's have a look at the FTSE 100 and the impact of all of this on the UK stock index. And as you can see here, we did start the day on the positive note, opened higher, and rallied early in the morning on better sentiment to 7,550, but have then since fallen back to around the opening level this morning. Now, the open was also higher than Friday's close, and the FTSE is actually the exception at the moment compared to other global stock indices in that last week it ended the week higher by 0.2%, whereas other global stock indices ended the week down. Now, this was probably due to commodity prices rising, for example, oil and gas prices rising quite significantly, and these obviously benefiting some of the constituents of the FTSE 100, such as BP and Shell, etc. So the FTSE 100 remains at the moment on track for its third consecutive day of gains. It has broken through the August to September downtrend line, as we can see here, and it is holding above the orange line, the 55-day simple moving average at 7,475. So basically, from a technical perspective, the current advance still looks positive, and what we would like to see now in order to confirm a further continuation of the the mid to late August advance is for us to close above last week's high later today at 7,524. So if we have a bullish close above there on a daily chart closing basis, the next upside targets would be the high seen at the 10th of August at 7,624, and also the red line here, the 200-day simple moving average is 7,638. Now, if we don't close above 7,524, we could see some further sideways trading around current levels, around the 7,500 market. But basically, from a technical perspective, provided we stay above the last reaction low, that is to say a low which was made on the daily candle, below the previous day's candle low and the next day's candle low, that is to say here, last week's low at 7,369, provided we stay above there, the uptrend remains intact. Moving on to the Eurozone and the DAX 40, the German index here. You can see the daily financial bet of that. Here we had a hammer form last week. That is to say, we opened and then we had a decline, which was pretty sharp. Here you can see the shadow being a very long shadow on this doji. And then we had a bounce back and we closed more or less where the market opened. So that is called a doji, and it's also called a hammer because the shadow here is 3 times longer than the body. In this case, much longer than that. So we're seeming to hammer out a bottom here. Now, this pattern will only be valid once today we close above Friday's high. And Friday's high was made at 15,787. So if today we close above there, then we have a bullish reversal signal. And as you can see here, intraday already, we have risen so far to 15,871, which was very close to the July to September downtrend line at 15,898. That, together with the orange line here, the 55-day simple moving average, at 15,928, represents our upside targets in the short term at the moment. If we were to rise above the 15,928, then we could head back up again towards the August high, the late August high, that is at 16,044. But basically what I'm saying here as well, is that provided we stay above Friday's low at 15,575, further upside is likely to be in store for the DAX 40. And don't forget tomorrow on Thursday we have tomorrow we have the German ZEW economic sentiment data out, and on Thursday we've got the European Central Bank, both of which will obviously be very important for the DAX 40 and what it is likely to do going forward. But short term, it looks as if we have found support at Friday's low and are heading back up again over the next few days. And I was talking about the Nikkei 225 earlier on, and we can see here that it did decline by about 0.5% or so. Earlier today, it did hit the orange line here, the 55-day simply moving average at 32,412 earlier on today, which held as support. And it was just above the support line going back to August, which currently can be seen around 32,290. That's the tentative uptrend line here. But yes, we can see here that we are still on track for 4 consecutive days of falling prices. And this had to do, as I said earlier on, with the Bank of Governor Ueda saying that negative rates, as is the case at the moment with the central bank having negative rates at minus 0.10%, might actually end at the beginning of 2024 if wage increases in Japan were to continue to be seen. So here, from a technical perspective, provided we stay below today's intraday high at 32,759, further downside seems to be in store. If we were to fall through the tentative uptrend line here, then we could actually head back down again towards the July and also the early August lows, taking us way down back towards 31,682 or so over the coming weeks. The US dollar last week had its 8th consecutive week of rising prices, and that was the longest winning streak since 2014. And obviously it pushed the euro down. The euro had also been falling on the back of weak growth data coming out of the Eurozone. As we can see here, the euro dollar chart shows us this decline, and we are still trading within this downward trending channel, which we have been in since mid-July. And this has so far taken us down to 106.87. We're trying very gingerly today to hold above that support level, but from a trending perspective, it looks more likely that further downside is actually in store. And that could then, on a fall through 106.87, take us down again towards 106.36. That is to say, the low seen back at the end of May of this year. Now, for the bulls to be back in control, what we need to see at least today is a rise above Friday's high at 107.43. We need to close above there. And then we need to actually do much further work and also rise above the 107.66 low, the late August low. And ideally, what I would also like to see is a rise above the red line here, the 200-day simply moving average at 108.26, before we can say with some degree of certainty that there might be a reversal taking shape here. But at the moment, the trend is your friend, and that is still pointing lower for the euro versus the US dollar. There's a different story, though, in Japan to be seen, because here you can see that the rise we've seen in the US dollar against the Japanese yen, all the way from 138 yen at 08 sen back in mid-July, has taken us to a multi-month high, one of 47.87 here last week. But now, with the news that the Central Bank of Japan Governor Ueda said that the negative rates policy might end at the end of at the beginning of 2024, I should say, has led to some strength in the yen. And here you can see that on the US dollar yen chart, which is the inverse, obviously, and that has taken us down to the July to September uptrend line, which currently can be seen exactly where today's low is at 145 yen and 90 sen, and we have bounced off that uptrend line. And this is why I believe that technical analysis is important, because these sort of levels you can't find with fundamental analysis, and you can't find these either with flow analysis. But the technical analysis with its charts and its uptrends can give you that sort of edge. Now here we are holding, so it might just be a minor retracement, as we've seen before, in a medium-term uptrend. So the uptrend still very much, for me, technically speaking, will remain intact, provided we stay above the 1st of September low at 144.45. Another currency pair has also come off very sharply earlier this morning, and this was the Chinese yuan against the US dollar. So the US dollar falling against the Chinese yuan. And it had to do with a higher than expected fixing by the Central Bank of China. And also it's basically saying that it is going to intervene if it has to in order to stop the one-way flow and depreciation of the Chinese yuan, and that it is confident that the currency won't continue to depreciate going forward. And this has led to the US dollar against the yuan coming off its 11-month high, because if I zoom out onto a monthly chart, you can see here that we came very close to the high seen back in October of 2022, which was made around the 737 mark. And we've come off that because we came very close to it at 736.81 before the central bank basically made these statements and announced its fixing. So what have we got in store now? Well, basically short term, yes, we're topping out. And yes, we can see here some negative divergence. The latest price high we've made just last week on Friday was not confirmed by the relative strength index here, which made a lower high compared to the high seen back in mid-August. So you can see here on the price chart, we make higher highs, but on the relative strength index on the oscillator, which is the derivative of price, we made lower highs. And that is called negative divergence. And quite often it warns you of a possible reversal, which we've now seen. The question is this reversal going to continue? If it does so, we have some support going back to the July to September uptrend line, which currently comes in around 726.82. So that would be our next potential downside target. But from a technical perspective, provided we stay above the last reaction low, that is to say the low seen at the beginning of September at 723.92, further upside is in store for the US dollar against the Chinese yuan as well. The strong US dollar over the last couple of months has had an impact on a lot of commodities, pushing these down at first, but then actually some of them actually did rise over the last few weeks nonetheless. But one chart where we can see this very clearly actually is the price of crude oil. As we can see here, WTI last week rose to $87.61. That was a level last traded back in November of 2022. And you can see we've come out of this long bottoming formation here. And the fact that we've now risen and closed above not just the April high at $83.40, but also the August high at $84.39 leads me to believe that further upside is in store for the price of crude oil, and that we could soon on WD high head up and reach the psychological $90 mark, just as we did last week with regards to the Brent crude oil price. So here we're seeing some short-term consolidation, but the uptrend is very much intact. We've got some really good support around the August highs, $84.39, and basically the uptrend here is just taking a short-term breather with further upside to be seen, most likely in the days and weeks ahead. The price of gold did suffer from the stronger US dollar, as we can see here. But if you go and look at the daily chart, yes, we are coming back and trading around the 200-day simply moving average here in red. Let me just zoom into this chart to make it a bit clearer. And you can see here that 200-day simple moving average in red at $1,920 per troy ounce has held the gold price over the last 4 consecutive days. And basically, provided we stay above last week's low at $1,915 per troy ounce, we might have another attempt to the upside. Now, for this to happen, we would have to break above the orange line here, the 55-day simply moving average at $1,931, in which case we could perhaps head back up again towards the $1,953 high we saw at the beginning of this month. So short-term consolidation with a slight upside bias to be seen with regards to the price of gold. And silver, and the silver price, as we can see here, has declined quite dramatically over the last week or two. Silver is also trying to hold now above last week's high at $22.84. You can see this minor reversal to the upside taking shape at the moment. And that may take us back up again towards the 200-day simple moving average here at $23.47, and perhaps also towards the 55-day simple moving average at $23.65. Thank you very much for watching Charting Markets with me, Axel Rudolph. Please feel free to follow me on X, that is formerly known as Twitter, and my handle is @AxelR_IG.